Here's a shocking reality. Only 36% of Americans believe they'll have enough money to retire comfortably. Meanwhile, one man turned $10,000 into over $100 billion using principles so simple a child could understand them. That man, Warren Buffett. And today, I'm going to reveal his exact blueprint for financial freedom that anyone can follow, regardless of how much money you're starting with. Welcome back to Money Talks with Adia, where we decode the wealth-building secrets of the world's most successful investors. I'm your host, and today we're diving deep into the mind of Warren Buffett, the Oracle of Omaha himself. At 94 years old, Buffett has a net worth exceeding $100 billion. But here's what makes him different from other billionaires. He's made his fortune through simple, repeatable strategies that don't require insider knowledge, fancy degrees, or even a large starting capital. But before we unlock his secrets, let me ask you this. What if I told you that Buffett's approach to wealth is so straightforward that he once said, "Investing is not a game where the guy with the 160 IQ beats the guy with the 130 IQ? Stick around, because by the end of this video, you'll have the same roadmap that created one of history's greatest fortunes. But let's be real for a moment. Most people are nowhere near financial freedom. In fact, the average American faces these crushing realities. 64% live paycheck to paycheck. The average household has over $6,000 in credit card debt. Only 39% of Americans have enough savings to cover a $1,000 emergency. 21% have no retirement savings at all. Sound familiar? Maybe you're drowning in debt, watching your paycheck disappear before you can save a dime, or you're investing blindly without a real strategy, hoping something will stick. Here's the brutal truth. Traditional financial advice has failed most people. Save more, spend less. We've all heard it, but it doesn't work when you're already stretched thin. And those get-rich-quick schemes, they're designed to make someone rich all right, just not you. But what if there was a different way? What if instead of complex trading strategies or risky investments, the path to wealth was actually embarrassingly simple? Warren Buffett calls compound interest the eighth wonder of the world, and here's why. Let's say you invest $1,000 at age 25 with a 10% annual return. By age 65, that becomes $45,000. But here's the kicker. If you wait just 10 years and start at 35, that same $1,000 only grows to about $17,000. Buffett started investing at age 11 and called it one of his biggest mistakes, because he started too late. This is why he famously said, "Time is the friend of the wonderful business and the enemy of the mediocre." The secret isn't about having perfect timing or picking the next Tesla. It's about starting now and letting time do the heavy lifting. Here's where most investors go wrong. They chase trends instead of understanding businesses. Buffett has a simple rule. If you can't explain the business to a 10-year-old, don't invest in it. That's why Buffett avoided tech stocks for decades. It wasn't because he didn't believe in technology, he just didn't understand it well enough to predict which companies would succeed long-term. Instead, he invested in companies like Coca-Cola, which he understood perfectly. People will always drink Coke, they have global brand recognition, and they generate consistent cash flow. The lesson? Stop trying to find the next big thing and start investing in businesses you actually understand. Can you explain how McDonald's makes money? How about Apple or Microsoft? If yes, you're already ahead of most investors. This might be Buffett's most famous quote, and it's pure psychological genius. When everyone's panicking and selling, prices drop below their true value. When everyone's euphoric and buying, prices become dangerously high. During the 2008 financial crisis, while everyone was running for the exits, Buffett invested $5 billion in Goldman Sachs and made billions. During the 2020 COVID crash, he deployed over $25 billion when others were paralyzed by fear. But here's the practical application for you. When the market crashes, and it will crash again, that's not the time to panic. That's your opportunity. Set up automatic investments so you're buying consistently, regardless of market conditions. This strategy, called dollar cost averaging, ensures you buy more shares when prices are low and fewer when prices are high. Buffett's portfolio isn't diversified across hundreds of stocks. It's concentrated in his best ideas. His top 10 holdings make up over 75% of his portfolio. But here's what this means for you. Instead of buying 50 different stocks you know nothing about, focus on 5 to 10 high-quality companies you understand and believe in long-term. What makes a quality company? Look for consistent earnings growth over 10+ years, strong competitive advantages, what Buffett calls moats, competent management teams, reasonable debt levels, and growing market share. Remember, it's better to own a small piece of a wonderful business than a large piece of a terrible one. Here's the difference between investors and speculators. Investors buy pieces of businesses, speculators buy pieces of paper. When Buffett buys a stock, he's literally buying a piece of that company. He asks himself, would I be happy owning this entire business for 10 years? This mindset shift is revolutionary. Instead of watching stock prices minute by minute, you start focusing on business fundamentals. Is the company growing? Are they gaining market share? Are they innovating? Buffett's average holding period? Over 10 years. Some of his best investments, like Coca-Cola and American Express, he's held for decades. The practical takeaway, before buying any stock, ask yourself if you'd be comfortable not checking the price for a year. If the answer is no, you probably shouldn't buy it. But here's Buffett's most powerful secret, the one that separates him from every other investor. He doesn't just invest money, he invests in his knowledge. Buffett reads 500 pages every single day, not social media, not news headlines, annual reports, business books, industry publications. He once said, "The more you learn, the more you earn." Here's a story that perfectly illustrates this. In 1988, Buffett invested $1 billion in Coca-Cola stock, his largest investment ever at the time. Wall Street thought he was crazy. The stock had already run up, and many analysts called it overpriced. But Buffett had done something no one else had. He'd studied Coca-Cola's business for decades. He understood their global expansion potential, their brand power, their distribution network. While others saw an expensive stock, he saw an undervalued business. That $1 billion investment, it's now worth over $25 billion. The lesson isn't just about Coca-Cola, it's about the power of deep knowledge. While others were making quick decisions based on price charts, Buffett was making informed decisions based on business understanding. So let's recap Warren Buffett's blueprint for financial freedom. First, start investing as early as possible and let compound interest work its magic. Time is your greatest ally. Second, only invest in businesses you truly understand. If you can't explain it simply, don't buy it. Third, be contrarian. Buy when others are selling and be patient when others are rushing. Fourth, focus on quality over quantity. It's better to own a few great businesses than many mediocre ones. And finally, think like a business owner, not a day trader. Invest in companies you'd be happy to own for decades. But remember, knowledge is your ultimate competitive advantage. The more you understand about business and investing, the better your decisions will become. These aren't get-rich-quick schemes. They're get-rich-certain strategies. Buffett didn't become wealthy overnight. He became wealthy over time through consistent application of these principles. The best time to start was 20 years ago. The second best time is right now. Now I want to hear from you. Which of Buffett's principles resonates most with your financial situation? Are you ready to start thinking like an investor instead of a speculator? Drop your thoughts in the comments below. I read every single one. And if you found value in today's video, smash that like button and subscribe to Money Talks with Adia for more wealth-building strategies from the world's most successful investors. Before you go, check out my next video where I break down the exact stocks in Buffett's current portfolio and why he chose each one. Remember, your financial freedom isn't just a dream, it's a decision. Make it happen.